Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade on this Monday. Before we get into the charts, let's take a look at what traders are watching out there today. Following disappointing US labour data, stocks increase in the dollar fluctuated, solidifying expectations of rate cuts in the US later this month. Meanwhile, the yen declined as investors brace for instability in the wake of the resignation of Prime Minister Shigeru Ishiba. Oil prices rose in early trade, pairing last week's losses after OPEC Plus agreed over the weekend to raise output further, but at a slower pace from October due to anticipated weakening of global demand. And President Trump said on Sunday that foreign companies need to hire and train American workers and respect immigration laws following a raid in the US state of Georgia last week. Well, let's take a look at the charts now. Amidst the market volatility, Louise Bedford joining us from tradinggame.com. Louise, welcome back. Great to have you on the show again as we look at what's hot, what's not. Let's begin on the local index then with a look at the All Ords.
We have had a lot of action, there is no doubt, and the All Ords is still in positive territory. We're above our 30-week moving average, but I wouldn't be surprised if it dropped back down to that blue line at the top of the chart to represent a change of polarity. And all of that would be within expected, I'm going to put it in inverted commas, normal behaviour for a look that is going upward, creating higher highs and higher lows. So as a snapshot, the All Ords is at 1.87% volatility. So that is great for traders. It doesn't confuse us with our stops getting pipped out and then the trend continuing. The facts at a glance, there are 4 hot sectors, 5 cold sectors, 8 in limbo, and I'm pulling all of this from my hot or not report that I produce particularly for AusBiz traders at tradinggame.com.au/hot or not.
All right, so you can check out the details there. Louise, meanwhile, what are you seeing just in terms of moving averages at the moment?
Look, moving averages are pointing upward, and the good news is that means that our macro is on. Now, just as a refresher, a macro means that we are able to trade the Australian market. It allows us to say that the trend is up and it is time to engage. So when volatility is low and we are above our moving average with the All Ords, you can bet it, Andrew, I'm going to be in the market this week.
All right, sounds optimistic. Louise, let's take a look at the bigger end of the local index with the ASX 20. What do you see?
Now, this is less positive. Unfortunately for everybody who has got a superannuation package that is just looking at that top end, we are cold at the moment, which means we are underperforming the entire market. So with this, you can see, even though the ASX 20 is above its own moving average, it is below in terms of relative strength comparison. So your money could probably work harder elsewhere. So if you are using a self-managed super, this is not where to pop your money, and neither is the next chart, which shows the ASX 100, or the chart after that, which is the ASX 300. We have got a trifecta of cold. All three are cold. Now, that's interesting when the market's going up and up and up. It means that the gains are concentrated into the smaller stocks underneath the top 300. That is where your focus should be, and that is where the money is pouring in.
So let's look at a sector by sector basis then. Beginning with tech. What are you seeing there, Louise?
Look, everybody loves a good tech run. And yes, we are still above our moving average. However, have a look at the lower panel of this chart. That relative strength comparison has just dropped through its own moving average there, which means that information technology in Australia is no longer outperforming the All Ords. And that upper blue line, Andrew, that is a very strong line of resistance. So this week, the idea is not to pursue tech stocks too radically. Have a look and see if things are going to turn around. We're in limbo, we're not cold, so you can still look, but obviously you probably wouldn't want to touch too many of them because it is not going up and up.
Now, Louise, we've just been speaking of how well small caps did, particularly out of reporting season, outperforming the large caps. What are you seeing on the index there?
I did hear that as well, and what a great interview that was. Now, with the small odds, this is hot. Have a look at that. My goodness, we have got a relative strength comparison almost going straight up. So this is where the opportunities are to look this week. Now, we know also things that go up at that angle often go down at that angle as well. However, with this type of trend, you're going to have some warnings about when to exit when that index comes back towards that blue line. So this is an area to look at this week for your opportunities.
Well, speaking of things going up and then coming down, what are you seeing in the healthcare sector?
This perhaps is not so positive. We have got a cold health sector. We are very much struggling here. Have a look at the candles there, bright red, definitely below the moving average, and the relative strength comparison has been below for a long time. So if you still have got health care sector stocks, you really need to be considering, do they have a place in your current portfolio, unless you're looking to short, because really there isn't a lot of hope in this particular week for healthcare. Things may change, of course, but even if they do change, they've got a long way to bounce up before this could be considered a hot sector.
Louise, let's now focus on what we're seeing on Wall Street. So the major indices there, still flirting with record highs. What are you seeing?
It is interesting, isn't it? Because I love looking at three particular areas. The first one is the S&P 500 compared to the All Ords. Now, we can see from this chart that the S&P 500 is outperforming the All Ords based on that relative strength comparison down the bottom panel there, and they're above their own moving average as well. At only 2.35% volatility, that is good news for traders trading the US market. It is certainly simpler than when volatility was up around the 5 to 7%. That is generally the area that makes it difficult for traders. And if we look at the very next chart, I want to compare the NASDAQ with the S&P 500. So the NASDAQ, even though that does represent technology stocks and the Australian technology sector isn't going gangbusters, with the NASDAQ at only 2.94% volatility, where it is actually outperforming the S&P, and we know the S&P is outperforming the All Ords. This is the hot sector. So this is the area that you'd be looking to invest in terms of individual stock selection, but also importantly for index trading, perhaps with a beautiful fat ETF.
Louise, you've done it again, getting us across those charts. Thanks so much for joining us on tradinggame.com.au.
Fantastic.
And that is the trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.